Welcome to a special edition of Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Cathie Greifeld. And Scarlett, I've been up since 5 and I'm feeling pretty anxious right now.
Because it's D-Day.
It's D-Day. Of course, we're talking about the potential decision on spot Bitcoin ETFs. And get ready for a stellar lineup for this half hour. The SEC gets hacked. In a head-spinning few minutes yesterday, spot Bitcoin ETFs go from approved to not approved yet. We'll detail the social media mishap as deadline day arrives.
And joining us in just a moment to make sense of it all, ARK's Cathie Wood and Ophelia Snyder of 21 Shares to discuss their partnership in the long and winding road to a spot Bitcoin ETF.
And we'll also speak to Nate Geraci. He is the president of the ETF store to discuss the impact of what this decision will mean for the industry. And as always, Eric Balchunas from Bloomberg Intelligence is here with us now, but not to go through the flows.
No, and I'll make you feel better about 5 a.m. I haven't slept in 3 days, Cathie, okay? Very little. So this is a very fast-moving news flow. The latest is the fee war, right? So this is the first time a fee war has broken out before they've even launched. This is wild, right? So the big one this morning was BlackRock going to 25 basis points and then a waiver of 12 for the first $5 billion. Bitwise is still the low watermark at 20. ARK also came in this morning at 21 with a waiver of 0 for the first 6 months. Invesco's 39, again, 0 waiver. VanEck 25. You look at some of the other ones, again, they're all getting lower. Franklin 29, WisdomTree 30. That was higher 2 days ago. Fidelity is 25 now. That was 39. These are the more expensive ones, Hashdex and Grayscale 1.5. These will be tougher to sell. I mean, this is reality. BlackRock really has set the tone at 25, so we'll see if these come down. Now, we're also watching how big will the launch be. This is a question I get a lot. So here's a look at the top 5 most successful ETF launches by flows on day one. And you can see the top couple are BlackRock, some ESG funds. They have $2.1 billion as the number one. We have heard BlackRock has a big splash planned. Potentially, they'll be able to put in some money. We'll see if it reaches $2 billion. That would be called BYO, or bring your own assets. How much organic interest we have will also be interesting beyond the pre-planned money. But I'd suspect IBIT is somewhere on this list, and maybe we see $4 billion for the group. Now let's look at what's exciting and kind of takes us really close to the 1-inch yard line here is when one of the last things you do with funds when they're about to launch is you add them on the Bloomberg DES page. So our data group has been adding all 11 of these. You can see here, here's ARK-B. Also note the fee, again, 0. We're going to put the waiver in there for 6 months until it changes. And we got the inception of tomorrow, assuming all goes well. Cathie, so this is getting real. Hopefully I'll be able to get a little sleep on Friday and this weekend.
Not tonight, though.
Not tonight.
Tonight's still going to be exciting. And I'm thrilled to say that joining our conversation now is Cathie Wood. She is the CEO and CIO of ARK Invest. And we also have Ophelia Snyder, the co-founder and president of 21 Shares. And Cathie, I'd like to start with you, and I'd like to start with the obvious. And that's what happened yesterday, a little bit after 4 p.m. Of course, the SEC account on X tweeting that they had approved spot Bitcoin ETFs. We then heard within minutes from the SEC that that was the result of unauthorized access. So first of all, what is your reaction to the hack? And in your view, does this delay the decision process around spot Bitcoin ETFs at all?
Well, we were on with you, Cathie, last night. Both Ophelia and I were on with you. And we saw this come up, and I said, what's that Bitcoin logo doing in this SEC release? And why is Gary Gensler's face there? But we thought we had confirmation from an exchange. Turns out it was a hack. From all that we can see right now, it is not going to delay the arrival of a spot Bitcoin ETF. But again, you never know. You can never say 100%.
You can never say 100%. And Scarlett, we were on the phone, all 3 of us, and I have to say it's a phone call I'll probably never forget.
Yeah, I wish for some reason it might have been taped, and it'd be just great to kind of revisit that. Ophelia, I want to ask you about the fee war that's taking place. Eric mentioned all these fee reductions. In addition to fee reductions, there are waivers as well. Is it more important to be able to attract inflows early on thanks to those fee waivers, or have the lowest permanent fee, which is right now Bitwise at 20 basis points?
So I think there's a few ways to look at this. From our perspective, we really see this as an access product. This is about welcoming new people into the sector, and we want to make sure that the cost isn't something that is making that prohibitive for people, right? This is about ensuring that as many people as possible can participate in what is, I mean, as Cathie puts it, a massive shift in financial infrastructure. And I think that's really exciting. And so we're pricing it accordingly. This isn't a product where, it's not where we're necessarily looking to make, all of our margins or things like that. This is really about providing access. And, obviously we priced our product at 21 basis points, 21 million Bitcoin, 21 shares, 21 basis points.
I get it.
It kind of makes sense for us.
Yeah, it kind of all works out. I noticed that myself. Cathie, one of the things we noticed over the past week or two is that ARKW has sort of transitioned out of GBTC. Looks like you put a chunk of money into BITO, which is the ProShares Futures ETF, very liquid. Is that like a placeholder where you're going to maybe transition or leg into ARKB, which I would think would be important because then you get out to a fast start in the Derby?
Well, we can't say what we're going to do, especially since the spot Bitcoin ETF has not been approved yet. Your logic would seem sound if all works out according to plan. But again, anything could happen between here and there.
Okay, so watch this space, it sounds like it. Ophelia, I want to go to you on the fact that fees are so low. I think most people would agree that it's surprising to see just how low these fees are. Is there a certain break-even level for you when it comes to assets in the fund, at which point you would start making money on this product?
I mean, look, yes, all of these providers are competing. They're all businesses at the end of the day, right? And we obviously do have costs associated with this. And we've talked about this in the past that, costs associated with crypto products are quite a bit higher than they are for other more traditional ETFs, simply because you actually have more service providers in the mix than you would otherwise. So I think, obviously scale is going to play a role in that. One of the things that, is particularly interesting from our perspective is obviously we're bringing quite a bit of scale here already. As a firm, we manage close to $2.5 billion in crypto assets on a global basis already, and have been doing so for a number of years. Company actually celebrated our 5-year anniversary in November. So we're trying to really ensure that we're bringing that, and we're bringing that kind of scale and that operational stability and robustness to these products. And I think over time, obviously, that scale does play a role, as does, quite frankly, we obviously, this product forms a portion of a broader suite of products for us, which include a number of actively managed products. And I think for us, those are a little bit different and actually support our efforts in this sector more broadly. So we look at this really as a single component of a broader business activity.
All right, thank you so much for.
May I add something
Please.
there? There's something very important about what Ophelia just said. 21 Shares, our partner, has been up and running for 5 years with 40 funds before we partnered with them. And they have been through extremely volatile markets, through forks and halvings. And this is different. This is not like another ETF. So one of the reasons we partnered with 21 Shares is exactly what Ophelia said. They have already scaled in a way that very few have. And 21 Shares is the largest pure play crypto ETP provider in the world. So really important to make that observation.
Thank you for explaining that and giving that context. Cathie, I want to follow up by getting a sense from you. What do you anticipate will be the breakdown of initial inflows into ARKB when it is approved? What share will be retail investors versus what share will be institutional, and how might that look in 6 months' time?
It's interesting. We're going after all of these categories. And of course, our bread and butter historically has been retail, whereas 21 Shares has been much more institutional. And we're even speaking with state pension funds, as well as even some treasurers. So the interest is far and wide, and certainly we're satisfying a lot of curiosity out there right now with meetings. So we're looking forward to seeing, how this breaks down into flows. One thing though, when you're dealing with institutions, it's not going to be overnight. There are so many boxes to check, so much due diligence, and if the approval takes place, that is, for many of them, the starting point for due diligence. So I wouldn't expect overnight success. From Eric's lips to God's ears in terms of 4 billion, that would be amazing.
All right, guys, we're just getting started. Cathie, Ophelia, you're both sticking with us much more ahead as we get more reaction and insight to the impact of a spot Bitcoin ETF on the industry.
This Bitcoin ETF approval is a first step to allow more mass ownership of these self-sovereign assets. And I think this is certainly a watershed moment in terms of not only the financial elements of this, but the technology behind these assets.
This is Bloomberg ETF IQ. I'm Scarlett Fu, and back with us now in this special edition of the show, Cathie Wood, CEO and CIO of ARK Invest, as well as Ophelia Snyder, co-founder and president of 21 Shares, her partner in the proposed ARKB spot Bitcoin ETF. Ladies, thank you so much for sticking around with us. I want to get your take, Cathie, on the price of Bitcoin, price action, because when BITO launched, that's when Bitcoin prices soared to their record high, and we haven't gotten back to those levels just yet. So once a spot Bitcoin ETF is approved, do you expect this to be a sell the news kind of scenario for Bitcoin prices?
There's been a lot of anticipation. We've had a big move. And I think a lot of people are saying this is going to be a sell the news event. And so maybe there is going to be a sell on the news. But so many people are now saying it that I'm beginning to wonder if they really believe it, they're probably selling ahead of time. So we think that longer term, which is our focus, of course, with institutions really getting the green light now with an SEC approval, assuming that's what we've got here, we think that even going to 0.1 or 0.5% of a portfolio for institutions is going to be a price-moving event. Because we're already at 19.5 million Bitcoin outstanding, 15 million in long-term holders, strong hands. They haven't moved their Bitcoin in more than half a year, or roughly half a year. And the limit is 21 million. So this is true scarcity evolving here.
And Cathie, I want to ask you something about this sort of Bitcoin crypto community. You had said in a different interview that this is a way to get exposure to Bitcoin. What I see amongst the crypto, like the hardcore types, is they're like, this is paper Bitcoin. You're supposed to store it yourself. The whole point is a currency outside of the system. And it kind of gets at this like wedge between like what's the purpose of Bitcoin and traditional finance just looking to make a buck off of it. And the idea that the Bitcoin isn't there, because gold, DLD had to deal with the same thing. People didn't trust that they actually hold the gold bars, and so the State Street people had to go take a picture with the vault and the gold bars. What do you think of all that in terms of that reaction from the crypto crowd?
Well, I can understand it from one angle, but let me address, first of all, the Bitcoin is going to be backed 1-for-1 in cold storage. In our case, we have listed our service provider as Coinbase. So I want to make sure everyone understands that. I think what you're hearing from the Bitcoin community, and maybe they'd be called Bitcoin maximalists, is there is a fear of centralization. The whole idea behind Bitcoin is a decentralized network, transparent network. And so there's this fear of centralization. We believe that this is going to be a stepping stone in terms of access for many individuals. It's just an easier way to access it, and over time, as this movement matures, maybe they will get their own wallets, and it's highly likely they will. For institutions, right now, they are not going to custody, they're not going to go through all of the steps of the process that we've gone through. they need to get used to what this is first. This is a new technology. It's a new asset class. There's so much to learn. So this is a stepping stone. And as the movement matures, we do think, and we will encourage more and more decentralization. We think that's very important.
And I want to circle back to the concept of futures ETFs, because to Eric's point that some people have come out and said that these are paper Bitcoin products, Ophelia, usually you see that criticism levied against futures-backed ETFs. And with the spot Bitcoin ETFs launching, what does that mean for the futures-based products? Who would necessarily be interested in futures products and in favor, rather, of the spot product?
So look, you see this in commodities, right? Where you do see both physically backed products as well as futures products. There are some advantages to both. Obviously, we think physical is a little bit easier to understand, going to be more appropriate to a larger number of people. It's typically simpler to add to a portfolio and is therefore going to have a wider audience. That being said, futures products can serve a really important tactical role. There are some benefits around liquidity. There are some benefits around, certain phases of market cycles where that may be beneficial or may be beneficial in combination. I think one of the things we've done as a firm is really wanted to ensure that we are welcoming people into the space. And, Cathie alluded to that. This is a critical stepping stone to bringing more people into the space. If you believe in the long-term prospect that Bitcoin's going to change the way we do finance globally, you need a couple billion people using it. This is a way to do that. There's going to be a number of different ways to access it. Futures products form part of that. We also have a wider suite of actively managed products for people who are looking to take more advantage of our expertise in terms of markets and that active management element from ARC. At the end of the day, this is not a one-size-fits-all thing. This is a new asset class. We're going to have as many ways to access it as we do essentially every other asset class on the market.
So I got to follow up with that. Cathie, how long before we see leveraged Bitcoin ETFs, short Bitcoin ETFs approved, or an XRP ETF or an Ether ETF at this point?
Well, okay, that really depends on the SEC. And I think the stepping stone to those is, well, how does this rollout go? And we think it will go. We think it will go very well. So I think the SEC, again, we know that the research people at the SEC, and they know what they're doing. So I can't give you timing here. This one has taken so long, but maybe the learnings associated with this and the fears associated with it, or the concerns about risk, will be allayed by this rollout, and those others will come along more quickly.
So in other words, Cathie, before 2034.
Yeah, yes.
Okay. Cathie, really appreciate your joining us. Cathie Wood of ARK Invest. Ophelia, thank you so much as well. Ophelia Snyder of 21 Shares. Still ahead, we're speaking with Nate Geraci, president of the ETF Store, on how financial advisors will likely use these spot Bitcoin ETFs. This is ETF IQ on Bloomberg.
This is Bloomberg ETF IQ Bitcoin edition. I'm Katie Greifeld, and joining us now to discuss the impact of a spot Bitcoin ETF is Nate Geraci. He is president of the ETF Store. Nate, you have been on fire on Twitter, every twist and turn. I know that you have a view on it, so I'm thrilled that you could join us right now. And before we get to the nitty-gritty here, put this day potentially in context for us. Of course, we've seen new asset classes come to the ETF wrapper before, but this obviously was a long time in the making.
Yeah, it really has been a long time in the making. I view this as a monumental day in ETF history. It's been 10 plus years since the Winklevoss twins first filed for a spot Bitcoin ETF. We've seen all sorts of twists and turns along the way, including yesterday with the fake SEC tweet, but it does look like we are finally at the finish line for approval. And I view this as really completing a bridge between traditional finance and the crypto space. We know ETFs have a long history of opening up asset class exposure for everyday investors. That is exactly what is happening here with an emerging asset class in Bitcoin.
So we were talking with Cathie Wood earlier, and she was saying that this SEC approval, when it comes, would mark the starting line for institutional investors. Obviously, financial advisors are waiting to hear as well what happens. How do you anticipate financial advisors to use spot Bitcoin ETFs as they talk to their clients?
Yeah, I mean, I think this is probably stating the obvious, but just because spot Bitcoin ETFs exist, that doesn't mean advisors or investors should use them. It's clearly going to depend on the individual investor's unique situation. But what I will tell you is actually the exact same thing that I said on this show about 5 years ago, which is that when we visit with our younger clients in particular, many of them ask about allocating to Bitcoin. And it's interesting for us because we have a core gold allocation in our portfolios. Younger clients don't want to own physical gold. They want digital gold. That's how many of them view Bitcoin. And so for the right client and the right situation, I could see us allocating to spot Bitcoin ETFs. And I think that's how other advisors may approach it as well. But you know, what's sad is that the investors we talked to 5 years ago, they're still waiting for a spot Bitcoin ETF, but hopefully not much longer.
And Nate, about 60 seconds here. I hear you. And also advisors have older clients. They're trying to impress those boomers so they pass on the wealth. They keep the kids as clients. So I hear you. But where in the portfolio does this go? What do you sell in order to put a Bitcoin ETF in there?
Yeah, I mean, clearly it's a satellite holding. This is not something where you're going to load up your entire portfolio with spot Bitcoin ETFs. I really see the counterpart here to physical gold ETFs. That's what makes sense to me. It's an alternative asset. It marches to the beat of its own drummer. It's uncorrelated. If you look historically, a small allocation of Bitcoin has been additive to a globally diversified portfolio.
All right, Nate, really appreciate your time. I know that you have a busy day ahead of you, so really appreciate it. That is Nate Geraci of the ETF Store. And the conversation around spot Bitcoin ETFs doesn't stop here. SEC Commissioner Hester Peirce is coming up at 5 p.m. New York time on Balance of Power. And tomorrow, a special edition of Bloomberg Crypto with Grayscale CEO Michael Sonnenschein. And because of the U.S. holiday next week, we'll be back again next Wednesday, January 17th. But that does it for this special edition of Bloomberg ETF IQ. I'm Katie Greifeld, along with Scarlett Fu and Eric Balchunas.